ASRiA is a 6-year-old organization. It's a member-based organization. We're based in Hong Kong. And we look at sustainable and responsible investment across the whole of Asia. ASRiA was really formed with strong backing originally from some of the most venerable names in sustainable and responsible investment globally. So it was firms like Calvert and Domini and a number of the UK firms as well, many of whom had money to begin to put to work in Asia, and they began to find that they couldn't get answers to really straightforward questions. They couldn't get the information they needed on how sustainability issues and social issues translated into Asia. They couldn't get the research they needed in order to benchmark their views on companies. Well, probably the critical thing is that I worked for a whole range of international investment firms over the course of 15 years in Asia. So one of the biggest issues that always comes up when you're looking at hard issues like environmental policy issues and corporate performance issues is that you have to have a sense of what is known about Asian companies. And you also have to have a sense of how you would compare an Asian company to a European company, to an American company. And thankfully, that's one of the things, because of my investment background, that I've spent a lot of my career doing. And it makes a big difference, because a lot of the information tools that US and European investors are used to having when they look at environmental and social and governance issues do not exist in Asia. Governments don't set policies in the same way. There aren't the same government resources or the same policy bodies. And the companies themselves in Asia simply are really the first and second stages of corporate disclosure compared to what we're used to here. For those people who have a great deal of experience in supply chain management and in environmental and social compliance in the Asian supply chain, they raised some very important questions. They had very practical questions about how Walmart's actually going to implement. And this takes nothing away from Walmart's aspirations, but it says, let's look at how you're going to do it. Because if you simply make this announcement and move in a kind of command and control direction, push this down on the supply chain. And remember, the language of supply chain management is command and control. If you throw this on the supply chain, demand compliance, the view in southern China was, you will not get it. You will get a lot of the realities going underground, because the view was it would probably take 2 to 3 years to migrate the supply chain to the point where there could be reliable compliance. Why? A couple of things. One, a lot of the supply chain experts say that when you're dealing with top-tier suppliers, they certainly understand the expectations of global companies. But most of these companies have extremely complex tiers of their own supply chain, going down 2, 3, 4, 5, 6, 7, 8 levels. Deep in the supply chain in China, mislabeling of bulk chemicals is apparently fairly common. Now, that's not to say all of the constituent parts are wrong, but some might not be exactly as specified. The problem is that the methodology doesn't really work. There's a little joke that floats around in Hong Kong and southern China, and certainly I would guess more of Asia, that there's a new essentially badly treated labor force, and it's the labor force of auditors, because they are expected to go look at 3 factories a day, travel great distances, they turn up, they go in, they spend an hour on the ground. They know that oftentimes what they're being told isn't correct. They don't have the time to go through all of the paperwork. Moreover, increasingly they're being presented with paperwork that's pretty obviously fraudulent. All the numbers are perfect. There have been some really good grassroots reporting that talks about this really eloquently, about the fact that a very large number of Chinese companies in particular can go buy software packages and you create a dual, if not triple, set of books. Many Asian companies have been running dual books for years because that's how they've been dealing with the local tax authorities. It's not an admirable thing, but it's the reality. And that when you bring auditors into the factory, they will develop the ability to show a very compliant portion of the factory. And they'll say, yes, this is where this product is manufactured. That may not be the case for the rest of the factory, nor for the underlying supply chain. And I think that's becoming a very big concern, that some of the strategies being used in the supply chain to provide apparent compliance are resulting actually in a real breakdown and a lot of cynicism. There's simply a view on the part of a lot of the suppliers that you want this performance, but you don't understand our issues, and in fact, you don't really want to pay for it. The Chinese government is trying to develop some new tools for really addressing a whole host of consumer product and food and pharmaceutical safety issues. It takes years, if not decades, to develop the regulatory and, more importantly, the enforcement tools necessary. And China is only just starting. They've had a food safety bureau, and they've just had actually a fairly serious scandal associated with that bureau. So they're beginning to reassess how and which arm of the bureaucracy should look after this. But there is one important takeaway, especially for US-based observers, which is that the Chinese government is beginning to react very strongly to this issue. There's a real public tension on this issue of there are all these products out there and they may not be safe. China is a country where it's tremendously important in terms of the overall political environment that a broad base, or as broad a base as possible, can have access to the fruits of economic development. And if the products are unsafe, that's a pretty destructive element of the process politically. And I think Beijing understands that very clearly. China is a country that has been running incredibly fast down the road, and all of the infrastructural supports and key raw material supports that Chinese companies may need are not there every day of the week, or the product isn't being delivered every day of the week. There's tremendous pressure on suppliers at all tiers of the supply chain. It's really important to stress that the Chinese media is very, very active on food and product and health safety issues. It's one of the areas where the Chinese press has been given a real green light. The government can't possibly police all of these situations. And so you see a lot of reports, not just in the traditional print media, but increasingly on the web. And I think that's one thing that I would really try to stress for a US audience is that, yes, there are constraints on the internet in China, but it is also an extremely active venue day in, day out for discussion and debate of exactly this sort of issue. And what a lot of the global companies are finding is that you really have to keep your eye on it if you want to sell your product in Asia. China is absolutely the wrong place to take a substandard product. And I think a number of global brands are going to have to look at that more carefully, because obviously you can't hit the same price points in China. But that's not an invitation for taking in a substandard product. Products that are identified with global brands are frequently marketed in China, oftentimes made by local factories, and companies are going to have to work very hard to understand the terms of competition. One thing I would really stress is that given the free flow of information into China on these issues, your average consumer in Beijing, in Shanghai, in Guangzhou, in Nanjing, in Chengdu, they want exactly the same things that someone sitting in Amherst, in Cleveland, in San Francisco wants. And in many instances, they know exactly what the issue is. And the key characteristic that a Chinese consumer brings to it is a lot less trust. It's really, really important to stress that our knowledge level, and in fact, the knowledge level of the companies themselves about their risk profile on toxic chemicals issues in Asia is low. And there's no way to sugarcoat that. The information is simply not there. And it's not there because the legal structure hasn't been there. There hasn't been this same, in most Asian countries, there is nothing that looks like a US-style civil law process. And it's not going to emerge in Asia anytime soon. And the net effect is what is known is simply much, much lower. Asian governments can tell you what laws and regulations they may have on the books. They frequently cannot even come close to telling you what the performance norms are in their marketplace because they simply don't have the resources nor the regulatory tools needed to assemble an inventory. In most Asian countries, they're only beginning to test groundwater. So all of the tools that have begun to develop in North America and in Europe and have been in the process of being implemented and evaluated over the last 30, 40 years are only just beginning to emerge in Asia, and they typically only come into the public realm when there's been a real disaster or a scandal. So, issue number one, watch scandals. Scandals are a welcome event for no one. Procter & Gamble owns a brand called SK-II, which is a Japanese cosmetics brand. They were distributing a product in China, and a real controversy developed that perhaps the product was unsafe. It was causing rashes. I think it was a moisturizing product. And it was very interesting, not because it was such a horrendous scandal, because it's not clear to me that it was, but it was very interesting for what it told us about consumers in China, the ability of the government to even understand what the problem was, and the ability of Procter & Gamble to figure out what to do. So the product appeared to have a problem. The Chinese government, when there is a product problem, especially related to a company, and we heard this in Korea and in Japan, Asian governments do not step in proactively and say, no, this product actually meets our standards and we've tested it and it's safe. The last thing these governments are going to do is to stand up and defend a company. Because in many instances, they don't have a clear mechanism to be able to prove that they've tested the product or they know what's being distributed. So the government, even if they have standards, steps back. So the company is sitting out there for a while. They may have met the standards, but that can't be proven. Consumers, and this is what happened around SK-II, SK-II then said, fine, we'll offer a refund. Well, managing a refund process in a country like China is an exercise in chaos in the best of circumstances. And then they appeared to not offer refunds to every consumer. That caused a huge equity scandal. This went on day in, day out in the Chinese press, very high profile for days. Because one of the other things that happens in many Asian countries is when there is a problem, when there is a scandal, you go after the people with deep pockets. And foreign companies and foreign brands are a perfect target for this. And oftentimes the foreign brands are a little uncertain about how to handle it. And in many instances, they can't do what the locals would do. They can't and won't go and bribe someone. So the problems have oftentimes a very unpredictable dimension. This one did. I think there's a general perception that Procter & Gamble could have done more to help themselves. Only the Hong Kong government finally stepped forward and said that the product met their standards in their market, and the problem is slowly quieted down. So key feedback has been there needs to be technical assistance, there needs to be training, resources actually need to be provided. The other thing that needs to be acknowledged is that if the overwhelming discussion with a supplier is about short-term batch product deliveries, and it is a very price-focused discussion, you're simply not going to get performance on any area that may cost money. It's just that simple. So that's the obvious logic to the dilemma, which is I do think global companies, and it's by no means a problem just of US companies, have got to start thinking about whether they want supply chain partners. Because if you want companies to invest on your behalf and to really address the issues of chemicals in products and chemical substitution, these companies, these suppliers are going to have to develop new processes. To really do that with confidence, you do need to have a partnership. And that needs to be a discussion that is about something other than just price and delivery terms for the next 3 months. And that's the issue. Governments will work on it slowly, steadily, and it will also ebb and flow with political changes and also, frankly, with the development of access to the legal system. So I'm quite optimistic that we'll see progress on this. It will definitely be informed by news headlines from the rest of the world. Asian companies and Asian consumers are increasingly sensitive to these issues. And then you go drill down and you work at the country level, because every country in Asia is doing slightly different things on these issues. So I certainly look for companies that are beginning to be able to talk about this issue, not just in an episodic fashion, but in a strategic fashion, because this issue, whether it's toxic chemicals or other aspects of global production, this isn't going away.